These four cryptos could rally ahead of the rest of the market, and does the SEC have their next target in sight? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications to know when we drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin hit $29,000 today as large-scale buyers fueled a fresh sentiment boost. The pair enjoyed continued buyer interest overnight, following multiple announcements concerning new Bitcoin-focused institutional investment products. Trader and analyst Rec Capital reacted by saying, "Fantastic Bitcoin breakout beyond the multi-month downtrend. Very unlikely this will end up as an upside wick like in the previous months. A Bitcoin weekly candle close beyond the multi-month downtrend would be a great breakout confirmation. That said, a Bitcoin dip into the downtrend for a successful retest would offer a full confirmation of a breakout, and the retest area is 26,800. Regarding support levels, on-chain analytics firm Glassnode took the opportunity to underscore the significance of the short-term holders' cost basis at $26,400. The short-term holders' cost basis was now a formidable line in the sand, with Bitcoin USD rebounding strongly after placing short-term holders in unrealized loss territory. Glassnode tweeted saying 26,550 remains a significant baseline in determining the market trend. The 200-week moving average, another key bear market support line, also sits near the mid-$26,000 zone. Investment management company Invesco, which has $1.4 trillion of assets under management, reapplied for a spot Bitcoin ETF. In 2021, Invesco first filed for a Bitcoin ETF in conjunction with Galaxy Digital. It also filed for a Bitcoin futures ETF, but dropped the effort in October 2021 after a futures ETF by ProShares was approved and began trading first. In its filing, Invesco argued that the lack of a spot Bitcoin ETF pushes investors towards riskier alternatives, as seen in insolvencies like FTX, Celsius Network, BlockFi, and Voyager Digital Holdings. Invesco also emphasized the need for investor protection, saying that the approval for such a spot Bitcoin ETF hinges on surveillance sharing agreement with a significant regulated market, not on the regulation of the spot Bitcoin market itself. Surveillance sharing agreements facilitate the exchange of information concerning market trading activity, clearance processes, and customer identification, which would significantly reduce a potential for market manipulation, something the Securities and Exchange Commission is very concerned about. BlackRock in its filing advocated for the same thing, arguing that the Nasdaq could be brought in to fill this role. The SEC is very concerned with market manipulation related to Bitcoin prices and has cited this in almost all previous rejections. This is because the SEC's view is that Coinbase and others are not regulated as exchanges and therefore cannot be trusted to prevent fraudulent and manipulative acts and practices. Joining the race, Wisdom Tree Investments, a prominent asset manager in the United States, has also decided to venture into the Bitcoin ETF space. According to recent reports, the asset manager firm Wisdom Tree has filed an application with the SEC. The application was filed for a Bitcoin ETF named Wisdom Tree Bitcoin Trust. The firm aims to gain exposure to the price movements of Bitcoin. This is done while taking into account the operational costs and obligations of the ETF. Wisdom Tree plans to calculate the value of the ETF shares on a daily basis using the CF Bitcoin US settlement price, which consolidates trading data from Bitcoin spot exchanges. So far, the SEC hasn't given any indications as to when it plans to make an announcement regarding a Bitcoin ETF. According to a research report from Berenberg on Tuesday, stablecoins and decentralized finance are likely to become the next targets in the U.S. Securities and Exchange Commission's crackdown on the crypto industry. The investment bank said the SEC may now focus on bringing stablecoins, including the two largest by market cap, Tether and USDC, and decentralized finance protocols, into regulatory compliance. The SEC said earlier this month that it was suing crypto exchange Binance, its founder CZ, and the operating company for Binance US on allegations of violating federal securities laws. A day later, it sued rival exchange Coinbase on similar charges. Analyst Mark Palmer wrote, "If the SEC is looking to reduce the potential for unregulated DeFi protocols to serve as viable alternatives to regulated lenders and exchanges, they then could target the stablecoins that serve as the lifeblood for decentralized finance. By targeting these stablecoins, the SEC may also weaken the DeFi ecosystem." Berenberg says that if USDC is targeted by US regulators, the impact on Coinbase's revenue could be significant, noting that in the first quarter of 2023, the exchange generated $199 million in net revenue. About 27% of the total came from interest income earned on USDC reserves. Bitcoin, which the SEC has affirmed as a commodity rather than an unregistered security, is likely to be the ultimate beneficiary of the crackdown. EDX Markets, a non-custodial cryptocurrency exchange backed by Citadel Securities, Fidelity Investments, and Charles Schwab, is live as of yesterday. EDX differentiates itself from traditional crypto exchanges by not directly catering to retail investors, as it focuses on institutional traders. Additionally, trading access is via an API and does not offer a front-end or trading graphical user interface. The Wall Street Journal reported that it relies on retail brokerages to route investor transaction orders for cryptocurrencies to its marketplace. EDX chief executive Jamil Nazarali reportedly said FTX's failures had heightened demand for crypto exchanges that do not possess the inherent conflict of interest associated with storing customer funds. Nazarali said regulators like the different approach because they think it's important that there's a separation between the exchange function and the broker-dealer function. Investors want to trade through their trusted brokers, and that's especially true post-FTX. So people are falling back on the firms that have been around for a really long time and that have really stood the test of time, and that's a really important tailwind for us. The company will later this year launch EDX clearing to settle trades matched on EDX markets. So far, the exchange only offers 4 tokens: Bitcoin, Ether, Litecoin, and Bitcoin Cash, partially because of the unclear regulatory landscape in the US. Nazarali said, "We've had a limited set of tokens because until there's more regulatory clarity, we don't want to trade something that's potentially a security. Regulators really like that we don't take that risk. And because of all the institutional money flowing into these, we could see a rally in these 4 coins as well." The new crypto exchange made headlines after it announced its creation in September with investments from major TradFi firms Fidelity, Schwab, Paradigm, Sequoia Capital, and Citadel. Polygon co-founder Mihailo has proposed upgrading the Polygon proof-of-stake network to a ZkEVM Validium version, according to a June 20th forum post. If the upgrade is implemented, the new version will rely on zero-knowledge proofs to increase security. Polygon Proof of Stake is an Ethereum scaling solution that has over $900 million in total value locked within its smart contracts and does over 2 million transactions per day. It was first launched in 2019. In March, the Polygon team launched the second network, Polygon ZkEVM, that uses zero-knowledge proof rollups to scale Ethereum. In the June 20th post, the Polygon co-founder proposed to also upgrade the old Proof of Stake network to a ZkEVM version, making both networks rely on zero-knowledge proofs. He stated, however, unlike the network that just launched in March, the new version of the Polygon Proof of Stake will not be a rollup. In other words, it will not store compressed transaction data on Ethereum. Instead, it will be a Validium that stores only validation proofs on layer 1, while the actual transaction data will be kept on a separate chain. This compromise will allow Polygon Proof of Stake to have lower transaction fees than Polygon ZkEVM. The co-founder concluded it will also increase the security of the Polygon Proof of Stake, since it will allow the network to inherit Ethereum security. Once the upgrade is implemented, Polygon ZkEVM may be used for high-value transactions where security is of the utmost importance, whereas Polygon Proof of Stake may become the network for gaming and social media enthusiasts. The Polygon co-founder offered a timeline for when they thought the upgrade could be implemented by, stating that it could be implemented on mainnet sometime between February and March 2024. The launch of the Polygon ZkEVM and the upgrading of Polygon Proof of Stake is part of a grand plan by the team to create a supernet uniting many different application-specific chains. The devs call this project Polygon 2.0. United-based cryptocurrency exchange Gemini, founded by Cameron and Tyler Winklevoss, has announced plans to expand into the Asia-Pacific region. In a June 19th blog post, Gemini said it had planned to increase the number of staff at the firm's Singapore office, as well as establish an engineering division in India. The crypto exchange hinted at larger plans for expanding into the region over the next 12 months. The expansion plans come amid Gemini facing a lawsuit filed in January by the United States Securities and Exchange Commission over Gemini Earn. Gemini seems to be exploring different markets amid the crackdown on many crypto firms in the United States. In April, the exchange took the first steps to become a restricted dealer registered with Canada's Ontario Securities Commission, which is one of the country's major financial regulators. And in May, the Winklevoss twins announced they had chosen Ireland as a base to grow the firm's services across Europe. That's it for your Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.